Hello everyone. Today we are going to have a discussion on a very interesting share which is Ashoka Buildcon Ltd, which is trading at 94.20. Now it's a share from construction industry, market capitalization of 2644 crore. It's a small cap company. Almost all the parameters are green. The current price is less than the intrinsic value, which is PE ratio is 9.57, which is good. So the valuation of the company is good. It's not costly. Also, it's good time to consider as the stock is not in the overbought zone. And also, the stock does not have any red flags. And also the top performance in growth as well. So as we know that in the latest budget, the government is having strong emphasis on increasing the participation of infrastructure in the Indian economy. So the construction companies are going to play a very important role, especially in the long run. So if I take the horizon of 20 to 30 years, good construction companies are going to get bigger. And if you invest in these companies at this time, at low valuations, you might be able to make a good profit as well. So if you look at the maximum, which is the growth percentage since inception, it's 28%, which is not very good. But considering the growth prospects and the fundamentals of the company, it appears to be a better decision to invest. So let's quickly look at the other parameters as well. 95% of the analysts have suggested that the investors can buy this stock. So it is an infrastructure development company engaged in construction and maintenance of roads, supporting services to land support operations of toll roads and others. So as you know, the Bharatmala project, wherein several thousand kilometers of road construction is supposed to happen, this company might play a very important role in that. If we see the forecast, it appears to be quite good. Higher revenue growth forecast. Return expectation is around 61.98%. If you look at the financials, let's look at the total revenue. It has slightly decreased, very slight decrease. Net income 276, which has increased, which is a good sign. Earning per share has also increased considerably. There is no dividend payout. So the market share is also increasing from 1.13 to 1.177. Revenue growth has a yearly rate of 12.08%. So compared to the industry average growth of revenue, which is 4.57, this company is growing at the rate of 12.08, which is very good. Now if you look at the balance sheet, the total assets 14,216, and also if you look at the cash flow, there is a positive cash flow, but it has decreased significantly. It could be due to investment in some project. Because it's an infrastructure company, it requires a lot of capital expenditure. Also, if we compare the other companies in comparison to them, this company has better fundamentals. Now let's look at the holding. The promoter holding is 54.48%. Also, the mutual funds have a good amount of consolidation, and the mutual funds also have their stake in this company. Work order from sewage treatment plants, stock will see action. So there is positive news on this company. cash dividend was paid in 2018, so no cash dividend in the last year. So that's something which we need to look into. Also, return on capital employed is 20.1%, which is really nice. Return on equity is 53.3%. This is absolutely amazing. Debt is 7106, so debt is to equity ratio will be high. Why? Because the capital expenditure, the amount required for construction activities in terms of cash is huge. So they have to take debt from banks in order to finance these projects. However, the return on capital employed is quite good and return on equity is also quite good. Earning per share is 13.19. Net profit 391 crore. Investment is also there. Free cash flow of 73.5 crores. Working capital requirement is also being fulfilled. Now, the moving average of daily moving average for the last 200 days is 98.9, and this is at below the daily moving average. So this is quite a good sign. Also, this company is trading at 24.6% less than its 52-week high price. So this is a good time if you want to consider purchasing this share. You should, in fact, you can, right? So it entirely depends upon you whether you want to take a positive view on that and you want to make an investment. So you can see the gray line, the 200 days moving average, this gray line, and this share price, which is the blue one, it's below that. So it's a good time to purchase. Now, company has delivered good profit growth of 39.82%. CAGR over last 5 years, very nice. Company has good return on equity. So these are the two aspects which you should definitely look into. Now let's quickly look into the company's presentation which they have given for the quarterly update for financial year 2022. So their slogan is developing infrastructure for better tomorrow. Okay, so the projects which are awarded, this is EPC contract, engineering, procurement and construction of road project worth 15,655 million from Adani Road Transport Limited. Okay, so it's a 6 laning of national corridors NH19 for Pangar to Palsit in the state of West Bengal on EPC basis. Awarded solar park project from Riva Ultra Mega Solar Limited, Madhya Pradesh. Okay. Received worth order 2,800 million from National Highway and Infrastructure Development Corporation on EPC basis. So the company has good number of projects on which it is working. This is a project which has been completed. Commercial operation date October 9, 2021. This project has been completed and it is eligible for the special purpose vehicle formed for the project is now eligible for annuity payment from National Highway Authority of India for 15-year period at a rate of once every 6 months from the COD. So the total order inflow which the company is supposed to complete in financial year 2022 is rupees 33,544 million. Very good. Acquisition, the Ashoka Highway Drug Limited entered into a share purchase agreement with Highway Concession 1 Private Limited for purchase of 49% stake. Okay. Also, it has acquired ABL acquisition of stake in Ashoka Betadli Shivamoga Road Private Limited. Okay. SBI Macquarie update. It is considering towards sale of ACL assets revised downward and capped between 11,000 to 12,000. Revenue has grown 31%, good sign. EBITDA 6.7%, profit after tax 1,968. Good. So the revenue breakup is mostly, the major contribution is road, power transmission and distribution, which is just 0.8%. 30% is road construction. 98.1% is railways. And CGD, this is the gas delivery, and others, building smart infrastructure. So this is the revenue breakup. We have seen the EBITDA growing. We have also seen the profit after tax, 956. So good movement. The share capital is 1,404. Reserves and surplus have increased. Debt profile, the consolidated debt of the company and the consolidated cash and bank balance. Okay. Now let's look at the EPC business highlight: engineering, procurement and construction. So they'll be responsible for the planning of the project. They'll also procure the goods, the machinery required, and then also do the construction. So this is the order book breakup. These are the orders received by the company Ashoka. So this is the project portfolio. These are the number of projects on which the company is working. The company financial performance, development business. These are build, operate projects, the toll collection. So it's a good profile of a company, and I think if you are considering to invest in this company for the perspective of long term, at 94.2, it's not a bad investment. 20 to 30 years down the line, the way the company is moving and growing in terms of revenue and profit, it can be a good option. Well, again, it depends upon you, how you want to take the decision, right? So thank you for watching this video. Please subscribe, because we do daily stock analysis of one particular share, which you should definitely consider in your portfolio.